Let's focus on the European markets, which have on expected lines opened in the red, in large part because of the weak economic data that came out of the US last night. The FTSE for you down about 0.2%. Frankfurt is down about 0.3%. And Paris, which is the other key market, that is also down in the red. It's down about 0.3% again. We've got James Ashley, who's European Senior Economist at RBC Capital Markets, who joins us on the line. James, thanks very much for coming in on the show. And sorry to have kept you waiting, but, there is this whole view that is emerging in the markets that all the positive triggers that were to have come have come. There's only negative news to come in the immediate future now. So you should expect some sort of a rout in European equities going forward. Would you buy that argument?
Oh, thank you for inviting me on your show to start with. In terms of the news that we've had, I think to some extent there has been a bit of over-exuberance, and that actually what we're getting now is a bit of a reality check. Your previous guest was talking about US growth this year running in the range of 2 to 3% here at RBC. We think that's a bit optimistic. We're actually expecting growth this year in the US of just 1.8%, so a little below that range. If you look at Europe, for example, the latest PMIs, they've been moderating, and they're signaling that the euro area is probably about to fall back into recession. Big differences obviously within the euro area, but the euro area as a whole probably in recession right now. So I think to some extent the relief rally that we've seen over the past few weeks is justified because the global economy is in a better place than it was 2 or 3 months ago. But at the same time, we should not see this as the crisis being over and everything being resolved. There's a lot of hard work to go, and I think to some extent markets are just coming around to that realization now.
Afternoon, James. You have the UK as well as France, which will release their final growth figures for the fourth quarter. The UK had revised its estimate of -0.2 last month. Any expectations from those figures and how that's likely to impact the markets?
I would expect that this release will probably be unrevised, so we'll get a confirmed reading of -0.2% for the UK. If anything, I think the risks around it are that we might see a modest upward revision, but I think the most we could possibly expect would be a 0.1 upgrade to -0.1%. So overall, whether it's revised or whether it's left unchanged, I think it will probably pass the market by fairly unremarked. I think more interesting is what's happening in Q1 and heading into Q2, what's happening to the UK economy there. We think that the UK will manage to avoid slipping back into recession, but it will be a fairly lackluster recovery. We think the growth will be around 0.1% for both quarters of the first half of this year. So yes, the UK avoids recession, but the recovery is going to be fairly weak nonetheless.
James Ashley, thanks very much for taking the time out and joining in. Those are the European markets, which are down in the red, and a pretty somber mood been created on account of Ben Bernanke's comments that it was too early to claim that the US economy had firmly turned the corner.